An issue that we've spoken a lot about over the years is the relationship between money, payments, law, and technology. And this is a topic that in our environment of increasing multipolar mercantilism is coming up more and more. So, what sorts of lessons could we say if we wanted to imagine a situation of increasingly multipolar, mercantilistic competition between multiple currencies? And if we want to think about this idea of international use of a monetary instrument, we obviously have thousands of years of human history. But if we look at the period since the Second World War, we've had a system which initially, from the end of the Second World War with the establishment of the Bretton Woods system to the early 1970s, was based on gold and the link between the US dollar and gold. And this very much served to underpin both the international hegemony of the US dollar, as well as to support the regrowth and reintegration of the global economy. Now, since the early 1970s, we've moved away from this role of gold to a system that we think of as fiat currencies. Currencies which only have value because of the policy structure, typically around independent central banks, focusing on monetary stability as a public good, often embedded in a focus on inflationary expectations. Now, there have, over the past 50 years, been many discussions about how one could replace or move away from the US dollar. And many discussions today, particularly as a result of these sorts of geopolitical changes, this move towards multipolar mercantilism, which we've discussed, and how could this play out in the context of monetary relations. And of course, if, as we've written about, we think about international use of a currency, it basically breaks down to a combination of its role as a medium of exchange, as a store of value, and as a unit of account. And these factors fundamentally relate to geopolitical factors, to geoeconomic factors, to convenience factors, to legal factors, and to technological factors. And if we wanted to look today at some of the leading competitors to the US dollar, for instance, the Chinese yuan or the euro from the European Union, if we think about both the CNY and the euro, both of these are quite widely used as a medium of exchange. In other words, in the context of trade relationships, both the EU and China are major trading powers, in many ways more significant than the United States, and as a result, their currencies are frequently used in the context of bilateral trade. Now, the second aspect is really from the standpoint of store of value. And a store of value fundamentally relates to not only the dependability of the currency in the context of inflationary expectations and general stability and trustworthiness, but it also relates to the ability to use that monetary instrument in the context of financing transactions, particularly the ability to have access to some sort of high-quality liquid safe asset. And if we look at the US dollar, one of the key underpinnings of the US dollar is the fact that the US government securities markets, the US capital markets in general, are the world's deepest and most liquid. And as a result, the US dollar has a very strong advantage in the context of this role as a store of value. Now, if we look at both the euro and the CNY, we can see that both have potential in this respect, but both face challenges. China, over the past 20 years, has developed the world's second largest domestic bond markets. But restrictions on flows of money in and out of those markets, as well as questions about liquidity and functionality within those markets, so far have limited their potential attractiveness as a high-quality liquid asset. And if we wanted to think about China's necessary steps from the standpoint of internationalizing the currency, one aspect very much would have to focus on easing access to the Chinese government and other debt capital markets in order to make it more easily available to have a high-quality liquid asset. That would be a major policy choice, but a necessary policy choice if one were to see the CNY increasingly used internationally as a major monetary instrument. Similarly, from the standpoint of the euro, each of the individual states within the Eurozone has quite developed government bond markets. But in all cases, those are constrained from the standpoint of size and therefore of less attractiveness than, say, the US dollar government bond markets from the standpoint of a potentially high-quality liquid asset market. And so, if we wanted to think about internationalizing the euro, the necessary focus would be on increasing the scale. For instance, through some sort of structure where EU securities, government securities, or other sorts of high-quality liquid assets were issued at a regional level in such volume that they would be able to meet the global needs of users of the currency. Once again, a major political decision. And finally, how about this point about unit of account? Certainly one thing that the US dollar has today that is strongly in its favor is that most of the world has the ability to understand amounts and concepts in US dollars. And if we think comparatively about the euro or the CNY, their reach from the standpoint of unit of account internationally is growing, but is definitely far less than what we see with the US dollar. And I suspect that from the standpoint of the US dollar's global role, it is actually going to be this unit of account function that proves most sticky. But that highlights exactly, if one is thinking about a world of competing currency blocks, the sorts of things that two of the other multipolar nodes would have to do if they wanted to erode the dominance of the US dollar in global markets.